Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. My apologies once again for this messy and complicated daily chart. I assure you that it's necessary for me to interpret where we have been, where we are now, and what the opportunities may be ahead. Okay, so the pattern construction that led to the market moving higher started in between mid-March to early May with the dark blue highlighted bullish shift pitch hook, which is still operational. The market over recent weeks testing the dark blue lower time, currently at 246.70, along with the nearby support the rising mauve medium moving average, currently 247.65, and a congestion zone below between 241.05 to 243.40, containing the 2012 high at 241.05 and the November 2011 high at 243.40. Then last week, prices took a flyer up over the dark blue middle time, currently at 276 even, and today being in the middle, being in between the middle time below and the dark blue upper time above, which is currently at 305.30. Now, I will go into the very recent actions shortly, but I'd first like to highlight some other larger and longer term patterns. In this, I must discuss the large bright red April to late October this year, the ascending wedge pattern, currently 253.90 up to up to 270.5. This pattern had been biding its time since late spring until 8 weeks ago, when we saw a significant false break higher, which only resulted in a small double top over September, an Adam and Eve type. There is a more recent pattern as well, though not so well defined, but still there, and one I thought last week might have possibly been triggered. It is a mid-August to late October head and shoulders top, with the previously mentioned double top being a split head, so shoulder, split head and shoulder, of the head and shoulders top pattern. Between 5 and 2 weeks ago, the market reached the purple highlighted neckline, currently at 251.90 on the downside. But from 2 weeks ago onwards, the market was having trouble sustaining the move lower. And last week, we ended up back up over the purple neckline again. Now, I said the following last week, and I quote, "There was so much of a move in time and price over the last 3 weeks below this neckline that I felt obliged last week," so that's 2 weeks ago, "to lay out some potential targets below. Though, as I said last week, and I quote, I fully understand I may have to retire them as soon as next week. Thus, a primary target X will be down in the 225.55 zone, with a secondary harder to reach target X1 down in the 192.15 zone. These same conditions apply to the previously mentioned large bright red ascending wedge pattern. These would have a primary target X2 down in the 232.90 zone, right on the 50% Fibonacci line of the May to September move, with a secondary harder to reach target X3 down in the 215.45 zone." End of quote. I also added 2 weeks ago, and I quote, "Must emphasize once again that I am quite prepared right now to retire these targets immediately, as the break lower from both patterns, though occurring right now, is tenuous." End of quote. I left them alone last week, but I will retire them today after this commentary. So, last week saw a racing move higher, continuing this week, that has so far peaked at the September 2011 high at 290.85. The question now is whether this move higher is a true break high or just another break. That all it will do is alter the bright red ascending wedge pattern if it is just another false break. Now, personally, I would not verify it just yet, as to me, though there has been more than a sufficient move higher in price, the time element in how much time we have spent above the bright red upper trend line, well, the 3 days so far still make this suspect. However, I will not leave such a question unanswered, and I accordingly, though I do not regard them as targets, just as most potentials, that I accordingly, potentials of possible primary potential on the upside for the bright red ascending wedge pattern is up in the 319 even area, with a secondary much harder to reach potential way up in the 347.80 area. There's one final thing I'd like to highlight, that this sharp move higher has allowed, and that is a possibility, that we may have a monthly key reversal here for November. Thus, if we close on Friday next week, not this week, but next week, Friday next week, the 29th of November, either over 267.95 or under 245.5, then we'll be on. Right now, we are looking at a monthly key reversal up. London Coffee. 21 weeks ago, I initially drew a bullish Andrews pitchfork on my daily chart. 14 weeks later, I finessed this into a shallower bullish shift pitchfork for the same move to show the bullish angle of attack of this market. It is highlighted in dark blue on my daily chart, and after a few false break attempts higher in late August and over September, the market has moved down to where we are now. In between the middle time below, currently at 46.13, and the lower time below that. Sorry, middle time below and the upper time above, which we are, let me get that right first, 51.74. The middle time has some initial reinforcement from the slowly rising mauve medium moving average, currently 46.15, though how good this has been in recent times is very debatable. Another pattern also emerged from earlier this year and is highlighted in bright red on my daily chart. It is the late April, early September, quite large ascending wedge pattern, currently 47.23 to 52.70. The lower uptrend had been reinforced and also helped in reinforcing both the dark blue middle time and the mauve medium moving average. Though the same as the medium moving average, my thoughts about it are, which is how good this has been in recent times, is very debatable. Last week, with prices seemingly establishing themselves below the triumvirate of the dark blue middle time, the mauve medium moving average, and the bright red lower trend line, I set out some potential targets below for the break lower. Thus, as I said last week, I should temper that. This could have a primary target X1 down in the 39.45 zone, with a secondary harder to reach target X2 down in the 32.60 zone. Now, I am mindful of the false breaks we have had from this pattern, so please be aware that though this right now looks like a good break lower, it may still turn back up. Why, you may ask? Well, it has looked like a good break lower for well over 3 weeks now. We really haven't seen that much exploitation of the downside. And that's the end of the quote. Last week's reversion back up means that these potential targets below are no longer fit for purpose and will be retired after this commentary. Now, going back to last week's actions, as well as today's moves, the move up halted at the mid-October high at 48.80 and did so for two sessions late last week and also today's session so far. The green short medium moving average, currently 42.77, which looks on the surface more like a nuisance than a resistance, has been quite good late last week on a closing basis. So continue to watch out for that from today onwards. Now, there's one other pattern that has emerged over recent weeks, and that is an early October to early November descending wedge pattern, which I've decided not to highlight for the moment. The break higher late 2 weeks ago was a primary target X, not too far away in the 50.01 area, with a secondary target, a much harder to reach target up in the 54.17 area. Though I have listed these potentials topside here, I'm still not sure about them, but I feel obliged to let you know what the potentials are, even with the market as it is.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.